it's something you can't necessarily do with the other instruments. Okay, just recapping on keeping it simple, and this is by way of explanation as to why personally I prefer to trade stocks and why I teach the trading of stocks. As you know, I like to keep my trading simple. I prefer to take very easy trades. I want an easy life. I'm quite lazy, don't mind admitting it. And so, as I say, I like to try and trade easy trades. What do I mean by an easy trade? Well, this would be pretty much an example of an easy trade. Very smooth, as you can see. Price is just going up and up and up, and you could pretty much buy anywhere on that and then sell a bit later on, and you're probably going to make some money because the price has moved nice and smoothly. Same would be true if you were going short. Going back to the shorting video from a few weeks ago, you could, if you turn that chart upside down, you could sell at the top and buy at the bottom, or anywhere in between, and hope to make some money. So if you can find charts what look like that move very smoothly in one direction, I think you probably agree that that's a pretty easy trade, and without much skill you can make money, as opposed to something like that, which is a bit all over the place and really you ain't got a clue what's going on. It's up, down, left, right, sideways, much more difficult to make money. So the more easy trades you can get, the more money you can make, and the more stuff, the more things what are available to trade, the more potential there is for finding those easy trades. What do I mean by that? What I mean is, if you look at futures, as I said before, you've got quite a small universe of futures. You've got the very popular ones, the NQ, the ES, the FTSE, the Russell, Eurostox and the DAX. All lovely futures to trade, don't get me wrong, but that handful there is pretty much all there is to trade. So if you're a futures trader and you want to trade futures, or US futures for example, because that's the time of day you want to be trading, you're limited really to watching 4 or 5 futures, and if they all happen to be going sideways, then you're stuck, you ain't got anything to trade. And much the same is true of currencies, forex. There's again a handful of very popular currency pairs: the euro dollar, the pound and dollar, cable as it's called, Japanese yen, Swiss franc. Very popular, a lot of people trade them, but the same thing applies. You've got to be watching maybe 5, maybe 10 of those, and out of those 10 that you're watching, how many are going to put in a nice easy chart like the one what we just saw? Could be all of them, could be none of them. Chances are not many. Look at stocks on the other hand, and you've got thousands of them. As I said, literally thousands. There are about, talking just US stocks alone, about 10,000 US stocks. Now, not all of them are worth trading. Some of them are rubbish. Some of them trade on very low volume. They don't do anything all day. If you filter out all the ones what are too expensive, too cheap, or ain't got the volume, you still arrive at about 2,000 stocks which are well worth trading. So out of maybe a dozen futures, or a dozen currency pairs, or 2,000 stocks, where do you think you're going to find the most easy trades on any given day? Stands to reason it's going to be in the stocks, just because there's more of them. It's physics. There's no two ways about it. You've got more choice. Putting it another way, an analogy what I've used before, but I like it, so I'm going to use it again. Me dear old mother-in-law, bless her, loves to play bingo or lotto. Now she's figured out, as have most of the ladies what she plays with, that if you've got more bingo cards, you've got more chances of the numbers getting called out on your cards and getting a line or a full card, full house or whatever. So if you're just playing one card, you've got less chance of winning than if you're playing a whole bunch of cards. Now there is a problem with this strategy, and it's something what my mother-in-law is only too familiar with. If you've got all them cards, it's very difficult to keep track of them all. The guy will be calling out the numbers, and by the time she works out that actually she's had a full house, someone else has already claimed the prize and walked off with it. It's back to that old problem of watching loads of screens or loads of charts. Same thing, watching loads of bingo cards, difficult to keep track of them. Fortunately, there is a quite simple solution to this. We don't have to watch all of those cards, just like you don't have to watch all the stocks. In fact, when you're trading stocks, what you do is at the start of each day you just filter out the ones what are going to move on any given day, and you only watch them. So this is what I do at the start of the day. I go through the stocks and got a strategy to do this, and I just pick out, it's quite easy to do, pick out the ones what are most likely to move very smoothly in a single direction, like that nice easy trade chart what we just looked at, and I'll just watch those, and I'll make a list of maybe 10, 15, no more than 20 of them though, because like I say, I'm lazy and I don't want to watch more than 20 different stocks in one day. So I just filter out from 2000 the ones what are going to move, and I watch them. And then tomorrow I do the same thing. I just filter out again the ones what are going to move on that particular day. Just makes life easier. Alright then, so a quick summary of what we covered and why I trade stocks and why I teach stocks. As I hope you've understood by now, more stocks means that you've got more stuff to choose from, and therefore more trades, or more good easy trades. It's physics, it's quite simple, it has to be that way. Not only that, but stocks and in particular are very predictable. I know when the good moves are going to occur. They tend to occur at very particular times of the day, and that means that I can just sit around at those times of the day, take the trades, and then I'm done. Unlike futures or Forex, where I could be, or particularly Forex, could be sitting there waiting all night for a good trade to come along. I'd much rather just pick up the predictable trades off stocks, trade them when I know they're going to happen, and be done, and go off and do something else. They're also highly granular, like I said, very easy to adjust position size, which is good for getting started because it means you can trade very small size. It's also good when you know what you're doing, because if a trade looks particularly good you can scale it up very big. If it's a bit marginal, then you can shrink your size a bit. You can basically adjust your size according to what you're trading. If it's a low price stock, you might bump your size up a bit to compensate for the comparatively smaller movement. So a 10% movement in a $10 stock is obviously worth less than 10% movement in $100 stock. So if you can trade more of the $10 stock, then you can essentially make the same amount of profit as if you were trading the $100 stock. So very easy to adjust your position size according to the risk, the reward, your budget, the price of the stock, all of that kind of thing. And there's one other hidden thing in there what I haven't really talked about, and that is that there are a number of leading indicators what are available with stocks that simply aren't available in those other markets. And by leading indicators I mean indicators what aren't based on the price, and therefore aren't based on historical information and stuff what's already happened, but indicators what give you advance warning of what's about to happen. And as you can imagine, if you've got advance warning of what's about to happen, that makes trading it even easier. But that's something what we'll have to talk about in another video perhaps. Okay, hope that was useful and makes sense as to why I think that stocks are the easiest thing to trade, and I'll have another one for you soon.